Hello and welcome to another update video about VeChain. The VeChain chart is unchanged, so I still prefer the blue count. And in the last video, the price had reached the resistance area, the standard resistance for a wave B, and actually got rejected. In the last video, however, we didn't have any evidence that the wave C to the downside in the preferred blue scenario had started. However, it started exactly where it needed to, within the resistance area. Yeah. So the idea, the idea in this blue scenario is still that we have a potential 5-wave move up completed from June into the March high or February high, March-February. Yeah, 5 waves up in wave 1, and that a wave 2 pullback might have started. I will take this upper support area out. It caused a reaction here, but I will take it out because we don't need that one. I think we rather need the lower one now, okay? And we talk about that. So in the blue count, the reaction that we've seen here around the 20th of March was just an A wave low. In the white count, it was the wave 2 low point, and we could now be in a third wave to the upside. But the white count, as I said, is not the preferred one. I'm leaning towards blue. But the thing is, at the time, we were watching for a reaction in both the blue count and the white count, which happens. It's always good when both counts align. Then we rallied into resistance. I explained to you that I prefer the blue count, but yeah, there was no reaction yet, anything in the last video, in the last update. Now we've seen that reaction, and the market reacted perfectly to the 61.8 retracement at 4.76 cents, 4.75 cents. And now it seems like we've started the C wave to the downside. And the C wave to the downside should reach the 3.2 cent level next. Why that level? Because it is, first of all, the 38.2 retracement of the rally that unfolded between June and February. So it's the first key level anyway of a standard support zone. And it is the C wave target. So the first C wave target. Normally, what we say is we have the length of the A wave and then the length of the C wave. We compare them, and the 100% extension level is typically a key target. Well, that's the level that tells us that the wave A and the wave C have the same length. They don't always have the same length. They don't have to have the same length, but it's all about probabilities and likelihoods. In addition to that, it seems like the 100% extension level, the target, and the 38.2 retracement at around 3.2 cents overlap and align with the lower boundary line of this ascending price channel. So be aware of that. There's a bit of confluence there that we need to watch. And from there, then a third wave to the upside could start. But be aware, this is only the first level, so it might go a little lower. But it's worth watching for a reaction around that level. That's currently what I'm tracking. Other common targets for a C wave are the 1.236 extension. That's at 2.9 cents. The 1.38 extension at 2.75 cents. Or even the 1.618 extension at 2.5 cents. So they are the common targets for a C wave. Let's see if we actually get there. It would take a break, first of all, below this low at 3.9 cents to confirm further that we're now moving down in wave C. It's not guaranteed. It looks like it, but it's not guaranteed. And then a break below 3.7 cents for further clarification and confirmation. That's my update about VeChain. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.